Hello, good evening everyone, and welcome to this evening's webinar session. My name is Dr. Adiravi Banjoko. This is a session I do once every couple of months. It's a free session I do once every couple of months that's open to the general public. And today we'll be discussing the basics of trading the financial markets. We're just going to discuss what it takes to be a good and successful trader. For those who are joining us for the first time, the company dkbMARKETS is an online trading company. Our website is www.dkbmarkets.com, so you can always go to our website to get more details of our company, what we do. We're an online trading broker. You can trade currencies, US, UK equities and European equities. So we have our trading platform that can give you access to trade global equities and the global currency markets. And you can get details from our website. You can also go to our Facebook page where you can like us on our Facebook page and also get up-to-date information on the financial markets. Of course, do like us when you get to our page. You can like us, but also you can also click on the email sign up button on our Facebook page if you want to get onto our database so you can get automatic email invitations on our seminars, both live and online seminars. So that's on our Facebook page, facebook.com/dkbmarkets. We're also on Twitter. Twitter handle too is dkbmarkets. And you can also watch educational videos on our YouTube channel. Again, our handle on the YouTube channel is dkbMARKETS. So you can access all those sites for more information about dkbMARKETS, what we do, and also get some more information and resources, educational resources for yourselves. Okay, so that's just a quick brief on dkbMARKETS and what we do. And also, like I said, you can go to all those sites for further information. So back to the topic for today. I'm going to discuss the basics of trading the financial markets and what it takes to become a good trader. But before we start, it's very, very important to first distinguish the difference between trading and investing. It's a very, very important distinction because trading is significantly different from investing. They're two completely separate topics, trading and investing. Trading is short-term and investing is long-term. So with trading, you're looking to make your money in a few seconds, few minutes, few hours, few days, couple of weeks, couple of months. So trading is short-term. You just want to be in and out of the markets, and that's what we'll be discussing today, the basics of trading. So trading is short-term, just in and out of the market quickly, and then investing is long-term. So when you're investing or when you're an investor, you're looking at making gains, in the next 5 to 10 years. So an investor is looking at the 5 to 10 year horizon, and a trader is looking at, less than a couple of months or sometimes, a couple of minutes horizon. So that's the big difference between trading and investing. So as a trader, you need to have your trading hat on, think short term, and you need to be quite clinical and get in and out of the market. As an investor, again, you have to have a long-term view on your investments. So traders and investors are completely different. Obviously, you as an individual, you can be both. I do both. I trade and invest. But when I'm trading, I think like a trader, and when I'm investing, I think like an investor. So it's very important to distinguish those two. And this is a very popular quote, and I always quote it in all the seminars I do, from Warren Buffett. And he says, risk comes from not knowing what you're doing. Everybody on this webinar, I'm sure, has heard horror stories about people trading and also investing in the financial markets. We know people who've lost a lot of money in the financial markets. But the vast majority of people who do are because they don't know what they're doing. risk comes from not knowing what you're doing. And if you don't know what you're doing in terms of the financial markets, especially when it comes to trading, then yes, you will lose a lot of money. So that's a very good quote from Warren Buffett. Risk comes from not knowing what you're doing. I always say the best thing about the financial markets also tends to be the worst thing about the financial markets. The best thing about the financial markets is that anybody can get involved in the financial markets. You don't need to apply. You don't need to submit a CV. You don't need to know anybody. It doesn't matter where you come from, if you're tall or you're short, if you're slim or you're fat, if you're white or you're black, if you're educated or not educated, if you're from a lower class or higher class. It really does not matter. And that's the beauty of the financial market. It's a level playing field where anyone can get involved in the financial markets. So anyone can just wake up in the morning and decide to become a trader or an investor and, start trading and start investing in the market straight away. So that is the beauty about the financial markets. But that's also the downside, because that's exactly what most people do. Most people just decide one day to be a trader or to invest in the markets without any knowledge of what they're doing, without any knowledge of the financial markets. They just jump in and then they lose a lot of money. And that's what the vast majority of people do. And that's why you get a lot of horror stories when it comes to trading and investing in the financial markets. It's because people do not know what they're doing. So always remember that quote: risk comes from not knowing what you're doing. I personally have been trading and investing in the financial markets for almost 20 years now. It's coming up to almost 20 years I've been trading and investing in the financial markets. And I can tell you it's good fun, it's profitable, but yes, you need to know what you're doing. The other thing you need to know when you talk about the basics of trading the financial markets, you need to know what financial markets are. The term financial markets is always branded around the place, but you need to be clear what constitutes the financial markets. And the financial markets has four major components. So these four major components comprise of what we call the financial market. So you have the fixed income securities market, which is where you have the bonds and the treasury bills. So the fixed income securities market is one major aspect of the financial markets. Another major aspect of the financial markets is the stock market. So that's where you buy company stocks and shares. So that's the stock market. Then you have the currency or the forex market. That's another major component of the financial markets. And then finally, you have the commodities market. That's another part of the financial market. So these are the four major components of the financial market. So when you mention the financial markets, you're really talking about these four different markets: the fixed income securities market, the stock market, the currency or the forex market, and then the commodities market. For all intents and purposes, these markets are independent. The fixed income securities market is different from the stock market. Stock market is different from the currency market, and the currency market is different from the commodities market. So that's a very important distinction you need to make once you're approaching the financial markets, to know that there are these four distinct markets within the financial markets. The other reason why it's important to separate these financial markets into the four different components is also to do with investment risk. And a simple way of remembering investment risk, it just means what is your chance of losing money. And that's a simple way I define risk. What are your chances of losing money? So when you talk about low risk, it means there's a low chance of you losing money. So just always remember risk as your chances of losing money. So when you see low risk, it means low chance of you losing money. And the best financial market or in fact, the only financial market that gives you low risk is the fixed income securities market, the buying bonds and treasury bills. And depending on which bonds or treasury bills you buy, you can get rates from as low as 2% if you're buying UK or US bonds, to as high as 20% if you're buying Ghanaian bonds. So it all depends on which bonds you're buying. But by and large, fixed income securities like bonds and treasury bills are low risk. You have a low chance of losing money. Now, if you have a bit more risk appetite, so if you're someone, just to go back to the low risk, if you're someone that has a low risk appetite, i.e. you don't like to lose money, you're scared of losing money, you don't like to take risks, you don't want to take any chances on the money you have, then the best market you should go for is a fixed income securities market or the low risk market. So you need to determine what your own personal risk appetite is like. So if you personally are the sort of person that if you lose £1 or £1 or $1, you're going to be depressed, then you're defined as low risk. And then if you have that sort of low risk attitude, then just stick to fixed income securities. If you don't mind taking some risk, not a lot, but some risk, then you come to medium risk. So that's a medium chance of you losing money. And then the best market, to go into medium risk is long-term investment in the stock market. So the stock market, if you invest in the stock market long-term, you can get good returns and your risk is medium. It's not high. But this is long-term investing, not trading, long-term investment. So remember the distinction between trading and investing. So long-term investment in the stock market will give you good returns and is medium risk. But still remember, medium risk means there's a medium chance of you losing money. And then finally, we come to high risk. And again, high risk means exactly what it says on the tin. High risk means high risk. It means high chance of you losing money. So never ever forget that. If you don't have a high risk appetite, then you should not be trading. It's as simple as that. High risk means just that. There is a very high chance of you losing money. So if you don't have a high risk appetite, then you should not be trading. So if you do have a high risk appetite, then the best markets to trade, you can now see the terminology is changing from investing to trading. So trading is high risk, and the best markets to trade are the Forex or the commodities market, where you can get 100% return a year. So you can see the importance again of distinguishing between the different financial markets. Because if you have a low risk appetite, then it's best to stick to fixed income securities. If you want to take some risk but not too much, then it's best to invest long term in the stock market. And then if you have a high risk appetite like myself, then you can now trade, and then the best markets to trade is the Forex and commodities market. And like I said, that's what we'll be discussing today, the basics of trading, which is the high risk category. Now, coming to the basics of trading, trading offers you an opportunity to create another stream of income with good cash flow once you have developed your mindset sufficiently and learned the rules of trading. So there are rules to trading. It's just not guessing or jumping in and out of the market without knowing what you're doing, which is what we're going to discuss now, the basics. You need to know the rules of trading. There are rules to trading, and you need to develop your mindset sufficiently if you want to succeed as a trader. And if you do succeed, and if you do get the basics and apply the basics well, then you can add trading to your income stream. It's always good to have multiple streams of income, and trading is just one of the streams of income that can give you a good cash flow. But like say, once you've developed your mindset sufficiently and learned the rules of trading. Also, trading may involve heavy losses because, again, we say it's high risk, but this can be minimized with the development of a good trading plan. And that's what we're going to discuss shortly, because trading is all about you learning how to minimize your risk and apply good money management, which is a cornerstone of successful trading. So for you to become a successful trader in the financial markets, you must possess what we call the 3 M's. If you apply the 3Ms to every single trade you place, you're guaranteed to be a successful trader. I'll repeat that. If you apply the 3Ms to every single trade you place, you are guaranteed to be a successful trader. If you miss one M out, you're guaranteed to fail as a trader. So it's actually that simple when it comes to trading. You apply the 3Ms, your success is guaranteed. You miss one M out, your failure is guaranteed. So it's as simple as that. So for you to be a successful trader, you really need to apply the 3Ms in every single trade you place. And what are the 3Ms? And these are the 3Ms. Mind, money management, and method. So a successful trader applies these 3Ms to every single trade they place. The mind, money management, and method. And the most important M is the mind. As you can see in the slide, a disciplined mind is an absolute requirement for successful trading. You know, over 90% of your success as a trader is all down to your mind. The proper terminology for the mind there is trading psychology. So trading psychology is very important to your success as a trader, because you know, if you can't control your emotions, if you're not disciplined, if you're not organized, you will fail as a trader. You need to be able to stick to your plan. You need to be able to limit your risk. You need to be able to be consistent in what you do as a trader. And you need to be able to control your emotions. And if you can't do this, then you're going to fail as a trader. The two biggest emotions you need to control as a trader are the emotions of fear and greed. Greed will cause you to take unnecessary risks as a trader and lose all your money. And fear would also, you know, cripple you, because fear is frozen energy. When you're afraid, you'll freeze. You'll be scared to take trades. And obviously, if you don't take the trades, you're not going to make money. And that's why we said earlier that to be a successful trader, you need to have a high risk appetite, because you need to be prepared to lose money. And if you're scared, then, you know, and you're petrified of losing, you're going to struggle to be a successful trader. So this is the biggest part of trading, the mind, trading psychology. That's a whole topic in itself, trading psychology. In the master classes we run a 2-day master class in dkbMARKETS, where we go through all this in great detail, because it's very, very important, the mind and money management in your success as a trader, which is often overlooked in most training or teaching sessions on trading. Most people tend to focus on the method, which is important. The method is important, but it's the least important. The most important parts of trading is the mind and money management. And money management, as you can see in the slide, this is possibly also one of the most important factors in trading, because the first goal of money management is survival. You need to avoid risk that will put you out of business. And that's your first goal as a trader. And then the second goal is to earn a steady return. And the third is to improve on the second, which is, you know, earning a steady return. So the key to success as a trader is to earn a steady return. You're not going to be a millionaire overnight. You know, it's not a question of, you driving Bentleys and Porsches overnight being a trader. It's all about, you know, making sure that you discipline yourself well, avoid taking unnecessary risk, and earning a steady return. And again, like I said earlier, money management and mind, they are huge topics. That's a huge part of your success as a trader, but it's just for you to know today from the basics that these are the keys to success as a trader. The mind and money management, they're the two most important M's in trading. You know, you need to have a disciplined mind, control your emotions, and need to be able to apply good money management to your trades and avoid unnecessary risks. The third M, method, is also very important. So you must have a plan or a methodology to your trading, which is not based on tips, hunches, visions, or dreams. So you need to have a trading plan. You need to have a plan, written down plan of how you approach the market every day. Like they say, not having a plan is planning to fail. So you need to have a written down plan of how you're going to approach the market, what you're going to do on a daily basis, and most importantly, you need to stick to that plan. So you need to have a method of how you trade, what strategies you use, how you analyze the markets, when you enter the market, when you exit the market. So you need to have these three M's: mind, money management, and method. And again, during the 2-day masterclasses we run at dkbMARKETS, we do go through all this in great detail, and we do furnish you with a trading plan you can start trading with at the end of the 2-day masterclass. You will then be sent home with a trading plan that will enable you to start trading straight away. So do remember, these are the three M's for you to become a successful trader: the mind, money management, and method. Now here are some questions for you, and these are crucial questions that would help you become a successful trader. So question number one: why do you trade? Why do you want to learn how to trade? So that's one question. So think about that before I answer that question. Why do you want to trade? What's your motivation for wanting to learn how to trade? So why do you trade? That's number one. Number two question is, how do you trade? Do you just click the buy, sell button and just jump in and out of the market? How do you trade? Number three question is, what are the tools required for trading? So if you do want to trade, what do you need to trade? And last question is, how much do you need to trade? So we're going to go through these questions one by one to give you an idea of what trading is all about. So why do you want to trade? How do you trade? What are the tools required for trading? And how much do you need to trade with? So we'll start with the first question: why do you trade? Why do you want to learn how to trade? Now, people trade for many reasons. People have so many reasons they want to trade. They want to make money. They want to determine their own destiny. They want to have another stream of income. So trading means one can become their own boss and determine his or her own destiny if you're trading right. That's the key. Make sure you're trading right. So there are lots of reasons why people would like to trade. Some people trade for the excitement and the adrenaline rush. It involves pitting your wits against the very best, which is challenging and exciting for the risk taker. But these are not very good reasons for you to want to trade. You should not be trading for the excitement and the adrenaline rush. It's not an ego trip where you're trying to challenge others, and it shouldn't be an excitement or thrill. And it's definitely not for the risk adverse, because like we said, trading is high risk. There's a high chance of you losing money. So if you don't have a high risk appetite, you should not be trading, like I said earlier. So it's definitely not for the risk adverse. Very, very important. But the key to trading, or why you want to trade, should be the only reason why you want to learn how to trade is you want to learn how to trade well. That should be your only reason. You shouldn't be saying, oh, I want to learn how to trade to make money, or for the adrenaline rush, or for the excitement, or to beat people, or to show off to people. No. That might sound strange to you, but because if you do say, oh, I want to trade so I can make lots of money, then greed creeps in, and once greed creeps in, it affects your emotion, it affects your mind, and then you end up losing a lot of money. So your sole focus of why you want to trade, your sole focus should be on, because I want to trade well and be a good trader. And the definition of a good trader is a trader that applies the three M's. So your sole focus on why you want to trade should be on becoming a good trader. And like I said, the definition of a good trader or someone trading well is someone who is applying the 3 M's to all their trades. So it means that a good trader is someone who has their emotion under control, they are disciplined with the mind, they have a good money management, they have a trading plan, and they're sticking to that plan. So remember that trading well will make you money. If you just want to make money, you will lose money. So remember that. Remember that trading well, and trading well means applying the 3 M's. That's what will make you successful and make you money as a trader. So if your aim, like I said earlier, if your aim is just to make money rather than trade well, you may lose an obscene amount of money. So like I said, traders who trade for the excitement and the thrill are liable to take trades with bad odds and accept unnecessary risks, which will then lead to heavy losses. So again, your sole focus as a trader should be on trading well. And trading well means applying the 3 M's, and that means applying the mind, money management, and having a good method of how you trade. So the next question we're going to answer is, how do you trade? Do you just trade anytime you like or do whatever you like? And the answer is no. You must examine the market conditions adequately in order to assess when you trade. So basically, as a trader, you want to trade when the conditions are right to trade. And what do you mean by when are the conditions right? So as a trader, when the markets are active is when that's when it's a good time to trade, when the markets are active. So you need to determine, that leads to the next question. When are the markets active? Or when are the markets inactive? So for example, when there's a public holiday in the UK or the USA, UK being the largest economy in the world and UK the financial capital of the world, if there's a public holiday in UK or USA, the markets tend to be quiet. Not much tends to happen in the market. So you need to note public holidays in UK and USA, because there's no point trading when there's a public holiday in UK or USA, because the market conditions are not right. The markets will be sluggish. They will not be going anywhere. You also don't want to be trading prior to economic reports of high importance. So that's not a good time to trade. So you can see there are good and bad times to trade. So you must examine the market conditions adequately in order to assess when you should trade. If you just have an irresistible urge just to execute trades, it's no different from gambling. Like I said, in which case you may consider joining your local chapter of Gamblers Anonymous if you can't stay away from trading. Because a great deal about learning how to trade is also learning when not to trade. You actually find out that successful traders know when not to trade. So again, you need to be careful about that. So successful trading implies trading when the odds are in your favor. And odds in your favor means, making sure you assess the market conditions, make sure there are no public holidays in UK or USA, there are no reports of high importance coming out. If the market is going up, then you're looking to buy and follow the market up. If the market is going down, you're looking to sell and follow the market down. So it's all about stacking the odds in your favor. And this is where things like fundamental analysis come in, technical analysis come in. And that's what you're basically trying to derive from this analysis, is putting the market forces in your favor. And again, like I said, this session is just about the basics, just to show you what it takes or what you need to become a successful trader. But details of all this are covered in our 2-day master classes. I think the next master class we're having is on the 15th and 16th of September. Again, if you can find details on our Facebook page or Twitter page, or you can email us for details of the next master class. It's also on our website. Because, like I said, successful trading just implies trading when the odds are in your favor. And like I said, that is where the fundamental analysis, technical analysis come in terms of putting odds in your favor. So you need to know more about technical analysis. You need to know more about fundamental analysis of how to put these odds in your favor. So some more points on how you trade. So although you might have a brilliant trading system, if you feel frightened or upset, your account is likely to suffer. So again, it goes back to controlling your emotions when you trade. You don't want to be either excited or upset. You know, your success or failure as a trader is dependent on your ability to control your emotions. Very, very crucial. You know, your emotions have a huge impact on your trading account. Very, very important to remember. And like I said earlier, you should also avoid trading when important news is due to be broadcast. So you always check the economic calendar to see where reports of high importance are due out, and you want to avoid trading prior to that. So this already gives you an idea that you don't just trade anytime or anyhow. You don't just click the buy and sell button. There needs to be some process you need to go through. There needs to be some analysis you need to do to make sure you're trading at the right time and putting the odds in your favor. So the next question we're going to answer is, how do you trade? So you need to have a trading plan. You know, no trades must be placed without having an exit strategy. This is a very, very important point. I still get that now and again when the people who have taught how to trade, they get themselves into a trade and they call me to say, what do they do now? And I always remind them that you should never get into a trade without having an exit strategy planned before you get into that trade. So every trade you have must have an exit strategy before you place that trade. So when you enter the market, you should have decided beforehand where you're going to exit in that market. Very, very important. And again, that comes with your trading plan. We all go through losing streaks as traders because, again, trading is high risk. So you will have losing streaks, but it's imperative that your positions are kept small during losing streaks. And this is where your money management comes in, and also your trading plan. And under no circumstances, no one trade should put your whole account equity at risk. You should never ever wipe out your trading account with just one trade. You know, that just shows you have no knowledge about money management and risk management or trading. So no one trade should put your whole account equity at risk. That should never happen to you as a trader. So you need to treat trading like a business. Nobody starts a serious business without a business plan. So the same with trading, you need to have a trading plan, which is the third M, which is the method. You need to have a trading plan in place so you know what to do. Every step you take in the market, you have it written down so you know exactly what you're doing, how you enter the market, how you exit the market, when you trade, when you don't trade, your money management, all that is in your trading plan, and that's what makes you a successful trader, and that's what makes you consistent. So what are the rules of trading? Again, according to our good man Warren Buffett, the world's richest investor for many years, you know, he says there are two rules of trading and investing, just two rules. And it says rule number one, don't lose money. So money management, like we said earlier, is absolutely crucial in trading. You know, how you limit your risk, how you limit your losses is very, very important. So that's rule number one, don't lose money. And rule number two, don't forget rule number one. So you can see that money management is absolutely crucial when it comes to success as a trader and also as an investor. So you must remember that trading in the right way with the 3 M's in mind will make you money. However, if your aim is just to make money rather than trading the right way, this may result in the loss of an obscene amount of money. So always remember, your goal is to trade well. Your goal is to always remember to apply the 3 M's in every single trade you place. Crucial. So here are some special points of interest. You know, always remember, directors may lie, News forecasters may lie, so don't believe everything you watch in the news. Brokers may lie, don't believe everything you hear. Accountants may cook the books, like we know with Enron, but the charts never lie. And it's no secret what the charts tell you. So technical in analysis is very important in trading. So when it comes to trading, you need to understand and you need to learn technical analysis. Inability to read charts of the markets you're trading can severely handicap you as a trader. So as a trader, you need to know how to read charts, which is what technical analysis is all about. It's very, very crucial part of trading. And again, these are part of the things we cover in our 2-day masterclass. But again, it's not something you can learn on your own. That's the beauty of the internet these days. And Google, you can learn a lot of things online on your own, a lot of resources online. I'll show you some website at the end where you can get free resource to learn on your own. But like I said, we also have live seminars where we go through technical analysis, fundamental analysis in detail, and teach you all this in detail. So what are the tools you require or the tools you need for trading? So once you determine that you want to become a trader, there are a few things you need to get started, in terms of your trading. So what are the things you need, for you to start trading? Very simple, really. You just need a personal computer, either a desktop or a laptop. So you just need a personal computer with good memory and at least 2 gigabytes. The more gigabytes, the better, and at least a dual core processor. So you need a very good computer, a good laptop with lots of memory. And internet access, obviously, ideally broadband, because everything is internet-based, so you need internet access. Pen and paper, so you can make notes, especially when you're new to trading. You want pen and paper so you can make notes on what you're doing and record what you're doing. And then lastly, money. Obviously, you need money to trade with, but the good thing is you can start trading from as little as $100. So you can start trading with something small, learn how to trade, learn how to become a good trader before you start trading with big money. So you can see the tools of trading, it's not a lot. But once you start trading, you need to keep on educating yourselves as you do with any other profession. For you to be good in any profession, including trading, you need to continually educate yourself, continually improve yourself, continually learn. So continual education is very, very important. And like any other profession, you need to be disciplined and diligent. It's not something you take as fun and games. You need to take it seriously. And we all need to do some research before putting in trades. So you need to study the markets well. You need to analyze the markets well, analyze the charts, the financial markets, decide what you're doing, and, put in some thought and research before you put in your trades. And like I say, you do need to attend trading seminars and workshops, which also help improve your knowledge base and education on the markets. And there are lots of seminars and workshops out there, both online and live, that you can take advantage of. Here, wherever you are, whether you're in the USA, UK, Nigeria, wherever you are in the world, there are lots of seminars and workshops you can take advantage of. Some of them are also free, that can give you good information and resources that you can learn from. And like so, obviously, we do that ourselves to our dkbMARKETS here in Nigeria. Allocated time. So when you're trading, like I said earlier, you have to take it very seriously. You need to consider trading a serious business and treat it like one. So when you're going to trade, you need to allocate time to your trading. Like in any other business or job, you want to be free from distractions such as friends, telephones, TV, etc. Because most people, when you go to work, you don't have the TV on at work. You're not chatting to friends at work on the phone. So you don't do that at work because you want to be focused on your work. That's why you don't have these distractions at work. So you need to have that same attitude when you're trading. When you're trading, you need to be free from distractions. Some people think because they're trading at home, they can be watching TV, listening to radio, chatting on the phone, and trading at the same time. And, that's where they are wrong, and that's where they end up losing a lot of money because they're distracted. You need to be concentrating on what you're doing when you're trading. because there are lots of decisions to be made while you're trading, so you need to be fully focused on your trading. Otherwise, bad decisions will be made. And when you make bad decisions, you lose money. So again, people need to realize that trading is a serious thing. There are lots of things you need to consider while you're trading. I've mentioned some already in terms of checking for the economic calendar, checking the direction of the market, analyzing the charts. So, while you're doing all this, you want to be focused on what you're doing. Because like I say, it's more than just buy, sell, buy, sell, buy, sell. You need to be determining your risk analysis, managing your risk. So all these things you need to be doing and, putting some thought into it. You don't want to be distracted. Otherwise, you make bad decisions. So finally, you need to have a trading plan. Very, very important. You need to devise a plan of how you trade. You must develop a personalized trading plan, because without a trading plan, you're setting yourself up for failure. You'll just be guessing. So it's with a trading plan, you're not guessing anymore. You're now objective in your analysis of the market. You now approach the market with objectivity, and you become successful. So you need to have a personalized trading plan. And it's not only important to have a trading plan, but most importantly, you have to be disciplined and stick to your trading plan. And like I said, when we do our 2-day masterclasses, we do end up helping you develop a personalized trading plan that you can start trading with, and you go away, being able to start trading. Very important. So opening a trading account these days is quite simple. It's now very easy to open an online trading account. There are many online brokerage firms out there, just like us, dkbMARKETS, which is also an online brokerage firm. So like I said earlier, you can just go to our website and open a live account, which will then give you the platform and access to trade the currency markets, the commodities market, or even the equities markets. So details of all that is on our website, dkbmarkets.com. And also for those who open a live account with us at dkbMARKETS, they have access to mentorship program that we run for our live account clients. For our live account clients, we have a live trading session every Tuesday morning and a theoretical session every Tuesday evening. So that's just for our live account holders. So apart from you having a live account with us, you also have a mentorship program where you're able to talk to me every Tuesday morning and Tuesday evening and ask questions or comments. And we also have a 2 weeks live trading session every 2 months where we trade live together for 2 weeks. But this is only accessible by our live account holders. So that's another benefit for opening a live account with dkbMARKETS. Also, as we round up, if you're going to become a trader, you need to take it seriously. You need to do a lot of private study. You need to start learning things on your own. You need to, be up to date on definitions and terminologies. So you need to know what an uptrend is. Uptrend just means the market is going up. You need to know what a downtrend is. Market is going down. What are bulls? Bulls just means the market going up. Bears, the market going down. You need to know what the market support is. You need to know what market resistance is, what indices are, position trading. These are just some examples of terminologies that you hear in the market. So it's very important that when you start trading, you need to take it seriously. If you come across a terminology you have not heard before, try and find out what it actually means. Again, that's what Google is there for. And again, if you're a live account holder, you can always ask me all these questions during our live trading sessions. But it's important, to start getting better understanding of terminologies, know what they mean, know what they define. That way you get a better understanding of what you're doing. Here are some websites or resources that can help you in terms of information. MarketWatch.com is a very good financial website. It gives you up-to-date financial news. TheStreet.com also gives you up-to-date financial news. They're updated every couple of seconds, so it gives you up-to-date financial news on the financial markets, and also some financial resources too. MoneyShow.com is also a very popular website, MoneyShow.com. It gives you a lot of resources there on investing and trading, and also webinars and from traders from around the world. Stockcharts.com is also a very good educational resource. Babypips.com. So there are quite a lot of free resource online that you can take advantage of to get more information on the markets and how to learn on what the markets does for you all. So note these websites: marketwatch.com, thestreet.com, moneyshow.com, stockcharts.com, babypips.com. These are just some websites that would help you with general information, but obviously there are much more out there. There's so much more out there that can help you in terms of educational resource. Of course, there are our own links, especially our YouTube channel. The YouTube channel, like I said earlier, it's also a very good resource because, for instance, this session will be posted on our YouTube channel. So if you go to our YouTube channel, you can, from tomorrow, you probably find this recording on there, along with other recordings from previous webinars I've done. So they're all there on the YouTube channel. Like I said, also our Twitter handle, you can always follow me on Twitter and also ask me questions on our Twitter. So you can follow us on Twitter. And obviously the Facebook page too is also a good resource. You can see we do have information on the financial markets and stock markets on there. Oh, that's interesting. We also have some pictures of me and my partners there on our Facebook page if you want to see what I look like and what my partners look like. So our Facebook page is there, so do like us on our Facebook page. Like I said, there's an email sign up if you want to be added onto our database so that you can automatically receive email invitations of our upcoming webinars, seminars, and events that we do at DKB Markets. So you can sign up to get onto our database on our Facebook page. You see the email sign up app there. So you can sign up to be on our database. And like I said, our website too, you can see where you can open a live account and details about what we offer at DKB Markets. Okay, so that's it. Any questions? If you have any questions, do click the hand button on your control panel. You have a control panel in front of you there. So if you do have any questions, do click the hand button on your control panel or send your questions or comments through the question box